If you're doing great now, trust me, you're going to be doing unbelievably well in that final part of the move, providing you don't get completely dopamined up by momentum, which is a crazy old drug of its own. But this is a 4-digit move for us. We've spoken about the localized high of $333 that you might get a bit of chop and churn around there, but then go onwards. And our exit strategy is based off the gold-silver ratio because we're expecting such high degrees of outperformance. Gold-silver ratio, single digits for us, single digits, and you may have a shocking spike on overreaction for a short spell that can go even deeper than the 9.9s that single digits represents. So for me, more to come. However, nothing goes up in straight lines.
The precious metals market is currently witnessing a historic surge as gold stabilizes near $4,970, eyeing the psychological $5,000 barrier, while silver has officially shattered the $100 mark. This precious metals madness is being fueled by a perfect storm: record-breaking industrial demand for silver in solar and EV tech, intensifying structural supply deficits, and growing geopolitical uncertainty surrounding the Greenland conflict and U.S. tariff threats. In this deep dive, renowned macro analyst FrancisHunt, also known as the market sniper, breaks down why he believes we are in the midst of a generational wealth move. Hunt introduces the Hunt's law of Parabola, explaining that a staggering 75% to 80% of gains typically occur in the final 10% to 15% of a market move. He warns against the dopamine of momentum and urges holders to resist profit-taking for minor costs of living, as he sets his sights on a 4-digit silver target and an ultimate gold-silver ratio in the single digits. Using inflation-adjusted charts and log scales, Hunt illustrates why current prices are just the beginning of a secular blow-off. But with such extreme targets on the horizon, how do you handle the chop and churn without getting shaken out? Watch to find out. Before that, don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Yeah, we had an excellent surge, real, for me, generational wealth being made and furthermore to be promised. I fear, and having spoken to you and you were mentioning, anywhere between 35 and 50% of the sellers are actually potentially needing to take profit for cost of living based reasons. I would certainly suggest that might be the only sensible reason. If you are in silver and you've done well, I want to highlight the Hunt's law of Parabola, and that says 75 to 80% of your gains comes in the last 15% of the move. So if you're doing great now, trust me, you're going to be doing unbelievably well in that final part of the move. But this is a 4-digit move for us. We've spoken about the localized high of $333 that you might get a bit of chop and churn around there, but then go onwards. And our exit strategy is based off the gold-silver ratio because we're expecting such high degrees of outperformance. So for me, more to come. However, nothing goes up in straight lines, and we did cross a couple of key technical levels. I'm wondering, there's a couple of big levels here, Elijah. We've got 5K looming on gold, and we've got 100K looming on silver. And I'm wondering if, for headline reasons, there might be a little bit more drama in between now and the actual running of that my $5,100 level for silver, which, by the way, puts us very close to the 50 gold-silver ratio. So let's take a little run at the gold-silver ratio. I'll pass by silver just on the way there, though, because it's such an important market for so many of us, and many people want to see a little bit more around that. What are you looking at here? It is a silver chart, but not as you're used to seeing it. It's a silver chart adjusted for the CPI inflation. I don't agree with the numbers. I think they grossly overstate. I think it's like understate. My apologies. Let me re-say. The labor numbers are overstated. They're worse than people think they are. And inflation numbers are understated. But anyway, if we debase silver's price performance, you've actually only recently taken the 2011 high on allowing for the all-urban CPI rates. So that brings things looking far more less extreme. People are absolutely bedeviled by the scale of the move. But just to put this into context, we're expecting, don't look at the number, it's not meaningful, it's divided by the inflation rate, but this is a log scale chart. It's very deceptive. If I were to just for a second just put you back on regular and show you that number, that's what I mean by the law of parabola. Okay, that's where we expect you to get. I'm going to put that back on the log scale because it's almost too big for people to conceptualize. And I'm just going to do a percentage move for between here and target. In other words, this is the outperformance we are anticipating for silver against the inflationary statistics that you are given for all urban people. And that's still a further 692%. If we just leave it at 700%, we actually expect outperformance. You don't stop at the purple line. So if we just say 700% plus, that is 8 times against an inflation number as well. So it's not against a fixed level line that is the dollar against an inflation number. And we spoke, so please, unless you really have to, try avoid selling your silver is my message to all Americans. I want to see you survive this. I want to see you thrive through this. Your silver is your friend. He's going to continue to be your friend. And the biggest gifts come at the end.
FrancisHunt, the market sniper, breaks down the gold-silver ratio using volume-weighted candles, spotting a recent gold outperformance pullback to around 51 after hitting a projected 50 target from a continuation pattern. He sees this as a healthy pause in the stair-step decline from 107 towards single digits, giving smart stackers chances to reload on silver during gold's temporary strength. These pullbacks fuel the massive cyclical bull, far from over, with more explosive moves ahead. Ready to capitalize on the next silver surge? Watch now.
Let's take the O and gold-silver ratio. These are actually weighted candles, so you'll see they're different thickness. This illustrates the amount of volume that is behind something. So it's not a schizophrenic chart of any kind. It is an illustrator of volume. And I'm going to just take some drawing tools off that and show you that we actually had a breakdown here. We kind of a little bit missed this opportunity. So there was a gold overperformance spell just recently in the last couple of days where silver's been a little bit more muted. And that probably comes out of, I'm going to drop to 8 hours just to get a little bit more detail on the day because I really want to show you this. That comes out of a continuation pattern to the downside. So you may recall, Elijah, we said when you leave our orange box, which was the 74 value, you should primarily stack silver all the way down. So previously, when we were staying in the containment zone, keep having a 50-50 a little of gold and silver, and then you pivot primarily silver. That is our counsel to ourselves. I'm not regulated to advise you, but that's the take we had and what we gave to our community. If I drop down one more time frame, I just want to get the 4 hour. I think that will be the best. There was a real little opportunity that provided a little bit of trading luck for us. That was kind of on the taking here. We talk about this as a continuation pattern over here on the gold-silver ratio. This was in and around the 58s, 59s. You'll see that value. And this has been a silver outperformance period. So you project this amplitude down. This is HVF method. That's part of our communities. And you make that. And it gave a target of 50. It was amazing how it was just through the 50 mark. Bang, right there. And what was interesting is that since the 14th, 15th, you'll see the date here, beginning of the 14th, late 14th, the 15th, the 16th, silver hasn't got away from gold. In fact, you've had these pushbacks here, here, and here, and actually gold has been the better mover. Now, as someone who's managing a portfolio of open trades as well as investment, it was a great time to have a gold in my blotters as longs, and those have shocked me with their overperformance. And then I came and looked at the gold-silver ratio, and I said, yeah, it was warning us that we let go of the 58, which is just sub 60, and we've dropped all the way to the 50 level. We're now at about 51.5, and that is once you make a target, typically you get pushback and you fail to make any new ground. And this is illustrating. And this is very short time frame, by the way, but we're able to maximize our wealth. We've done exceedingly well this year and last year. as trading as well as investing. We turn that profit into stack. And this is one of the examples of how you could have biased for gold during this period and just taken some of the green out of your accounts for your silver entries that we've been enjoying all the way down here in the gold silver ratio. So we are actually in a little bit of a holding period in and around the 49 and a half through to the 52s, 53s on the gold silver ratio. And we might pause here a bit. So gold has overperformed silver slightly during the spell. Overall, we're going in staircases down. This was another period where you had some gold overperformance. So let me just illustrate it. When you were coming down from the 60s, right up at 70 and down, you had a spell here where the gold fought back a little bit, and those little spells can be put. But in the long run, this is going lower. Gold-silver ratio, single digits for us, single digits, and you may have a shocking spike on overreaction for a short spell that can go even deeper than the 9.9s that single digits represents. So that's Goldham's trading with the gold and silver ratio. And we've got so much more to come, which just tells you this market isn't over. This isn't, the crypto bros Bitcoin bull market where you don't even get, 6 months of favorable movement and you have a couple of shocks and awes in here. This is a far bigger cyclical event. And you can see we've come from 107, and it's good to have these pushbacks because it allows us to reload on silver, and it also means we don't get to that single digit too soon. I don't want it to happen too soon. I'm enjoying the ride. I like the setups and getting back.
As the market enters this high-stakes contagion phase, the gap between Western paper prices and Asian physical demand is exposing deep structural cracks. FrancisHunt emphasizes that while gold serves as a truth thermometer for currency debasement, silver is the amplifier that turns a trend into a transformation. With physical delivery stress now overriding traditional leverage, we aren't just seeing a price rally, we are witnessing a systemic reset. Will you be holding the physical metal when the paper game finally collapses, or will you be left chasing a moon-bound ratio? Share your thoughts in the comments section below. If you found this breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.